Good afternoon. Thank you for watching. My name is Mark and welcome to the latest Lamudi webinar episode with the title Money Moves to Make Right Now in partnership with Robinson's Land Corporation. Robinson's Land is one of the Philippines' leading real estate companies and most reputable developers of mixed-use properties, office buildings, residential condominiums, as well as land and estate developments, including socialized housing projects located in key cities and urban areas nationwide. RLC also leads in the development and operation of lifestyle shopping malls and hotels. With today's theme, Money Moves to Make Right Now, and with a number of economic indicators pointing their dials in a positive direction, there are signs that the economy is back on track for its forecasted recovery in 2021. What does this mean for real estate as an investment now? And what are the incentives for investing now versus waiting for more financial certainty? Today I will dive into just that with Mr. David Leechiu, one of real estate's most revered thought leaders with over 25 years industry experience and as co-founder and CEO of Leechiu Property Consultants. Welcome, David. Thank you for joining us.
Thank you, Mark, and thank you, Robinsons, for having me over.
Good to have you. Lovely view in the background. I want to start by looking back at really the last two major economic crises: the Asian financial crisis, 1997-98. The global financial crisis in 2008, to determine really if there are any lessons that can be learned from the behavior of their recovery that can be used to identify opportunities today. So David, I guess with 25 years experience, I wonder if you could give us a little bit of the historical real estate landscape going into each of these financial crises.
Sure. I guess the biggest difference between the last two crises and today is that the Philippines is in the best shape it's ever been today in all of its history. So that has allowed us to recover and go through this crisis a lot more gracefully than ever. And it's not only just the Philippines' internal fiscal management, it's not just the economy, but also the external forces that's benefiting the Philippines. Back in '97, when the crisis hit, the currency doubled. The US dollar doubled against our currency, and debt and many companies were heavily debted, and they got hit in terms of higher interest rates and the currency, because many of their debt was in US dollars or yen. And it took us about 8 to 9 years to recover from that crisis. There were no jobs, there was no BPO industry to speak of. Interest rates just choked every business. Inflation kicked in and wiped out so much wealth from the market, and money was brought out of the country. In 2008, with the global financial crisis, fortunately, the Philippines was insulated, not because it was doing so well, but because it never took part in anything that went on in the region or in the world in terms of investments. And the crisis hit the Philippines at the luxury level, at the high-end level. The middle class and the lower class didn't feel that crisis. And then during that time, in 2008, was the beginning of the real test for Philippines, because that was the year when the BPO industry really scaled up. You know, from year 2000 to year 2007, the BPO industry was about 400,000 people employed, and from 2008 to today, that jumped from 400,000 to 1.3 million people today.
Wow.
And that was driven by the crisis, the global financial crisis of 2008. So where are we now in 2009? In 2009, the global COVID crisis, if I can call it that, is going to create more jobs in the Philippines. That is really exciting. We said this at the very early stages of the COVID crisis, and I'm glad that is validated today. There's about something like 300,000 square meters of office space taken up in the Philippines as we speak. today, year to date, from January all the way to today, most of that leasing activity happened during the lockdown, during the COVID crisis. And one of the biggest companies in the BPO space, a company called Concentrix, which happens to be the largest employer in the Philippines with 75,000 people, have just announced last night that they're going to employ another 10,000 people in the Philippines. Okay, so the BPO industry is probably going to add another 50,000, 100,000 new jobs in the Philippines. Can you imagine that? Because of the BPO industry, the Philippines is the only market in the world that is still growing in terms of office space demand.
Yeah.
Every other country in the world, every other city in the world is contracting significantly. They're not growing, they're in the negative, and they continue to deteriorate. It's only the Philippines that's growing and healthily. And so while volumes are down by about 70% comparing it to last year, the reality is that we are still growing even though we're growing at a much slower pace.
Yeah.
And Concentrix is a very happy tenant of Robinson's Land. So some of the spaces of Concentrix is in the portfolio of Robinson's Land. And I think the other thing is that Filipinos have the highest savings, one of the highest savings rate in the world today. I think our savings rate is something closer to 18 to 20%. And while that pales in comparison to like the Chinese and the Japanese, who are the two highest savers in the world, and they're probably saving at around 40% rate, which means they don't spend any money and they earn a lot. The Filipino public have a balance of earning money and spending a bit and still saving. And so, so if you compare it to the West, the savings rate in the West is sub 5%.
Yeah.
So, and then the third biggest difference between the last two crises and today is that if you look at the Philippines today, in every metric, every economic metric has dramatically improved. Job creation, foreign direct investments, visitor arrivals, what else? Ease of doing business. All those things have dramatically improved in the Philippines. So much so that before this COVID crisis, many financial institutions like the World Bank, the ADB, JP Morgan, HSBC have always rated the Philippines to be one of the 10 highest growth markets in the next 30 years. And this COVID crisis has proven just that.
Mm-hmm.
During the COVID crisis in June, the Japan Ratings Agency upgraded the credit ratings of the Philippines to A- from BBB+.
Yeah.
Okay, we are probably the only country in the world that got any credit rating upgrade. Everyone is either status quo or being downgraded. Second, as a response to the global COVID crisis, the Philippine government had to borrow significantly in June. And they borrowed 10-year money and 25-year money at the rate of 2.2 and 2.4% fixed, unheard of, right? And you know what that's going to do? That's going to produce a massive collapse in interest in lending rates to homeowners, okay? As soon as this COVID crisis is over, which I think will be over in 4 to 6 months, after 6 months from today, you're going to see banks saying, okay, I think we're up for a strong recovery. We're going to unleash more capital into the system. And we're going to bring the premium down from where it is today, closer to what government borrowing rates are. And the third thing is that the government inherently is increasing liquidity at a time when the country needs it the most. And so 18 months ago, they started this program to bring down the reserve requirement ratio from the banks. They're going to bring it down from 18% to 8%. Today it's at 14, and they're going to keep pushing it down to 8 by next year. That delta from 18% to 8% is going to release $150 billion into the economy. not with additional borrowings, not by additional investments, but just by taking money from the vault that's been dormant there for 50, 60 years and taking it out into the economy. The second big event is what's going to happen hopefully this month or next month, which is the CREATE Act is going to be passed into law, assuming, and I'm very confident with our very hardworking congressmen and senators that that they will pass it, and the result of that is to bring corporate income tax down from 30% to 25% within this year. And they've got the view to bring it down from 25% to 20% by 2024. Okay, the movement from 30 to 25% makes the Philippines one of the lowest tax regimes in the world. It is going to be the third or fourth cheapest tax rate, corporate income tax rate in Asia Pacific, just above Hong Kong and Singapore. Can you imagine that? And that's at 25%. The closer we are to 20, the more attractive it will be for Philippine investments.
Yeah.
And I mean, I can keep going on and on and on. And these are all inherent, structural, fundamental events without attracting more debt and without attracting more investments.
All very positive stuff this time round. I think it seems that the Philippine economy, as you're saying, seems to be much more insulated now, less vulnerable now, as it was certainly in 1997 and definitely in 2008. I mean, even though those financial crises, as you say, were potentially more serious, more devastating overall, but particularly for real estate, I would imagine there would have been some opportunities back during both crises for investors at the time. There may perhaps have been less investors, but what were the opportunities that you saw in the previous crises that happened there and then weren't there after the crisis?
Well, I think the Asian financial crisis really was a massive wealth destructor. And whoever else that had money then moved it offshore or moved it to the US dollar. And that has paid them well without doing anything. The US dollar went from 26 pesos to 56 pesos. You would have made double your money just by converting it to a different currency. And that just disincentivized people from doing anything. Interest rates were very high back then. And so again, with no brain power, with no creativity, no energy, you just park your money in the bank in US dollars and you made double your money, right? Very different situation now. The currency is appreciating. Look at it this way. From 2008 to 2013, the US dollar went from 56 to 41. And that time was the best time to invest in pesos, in Philippine real estate. Yeah. The foreigners that I serviced, that I was able to convince to buy in 2008, 2009, were able to sell at 2013, 2014 at a massive bonus. Not only did they get massive capital appreciation of about 50 to 60%, they also had a 20% kicker on the currency that was tax-free. So that's pretty amazing. And at this point, the high savings rate and the low interest rate is just going to make investment very attractive for Philippines, especially now, because many developers recognize the impact of the COVID crisis. And as a response to that, they have offered significant discounts to prices. And I think this is something that Robinson's Land is very much doing and promoting right now. Their promos in terms of very low down payments, very low reservation payments, very low monthly, very generous financing, lump sum payment terms at the end that will make pre-selling very viable. I frankly am not a fan of buying pre-selling. However, this crisis has allowed many buyers to buy pre-selling products by paying 30 to 50% of the product during the construction period. And so you don't have to worry about the balance of the unit until it's handed over to you. And by the time it's handed over to you, you have a title and you can borrow from the bank the balance. And that just basically allows you to extend the payment terms of your unit to about 20 years.
Just to cite Colliers here, they mentioned that during the Asian financial crisis, the condominium prices dropped by up to 14% from 1998 to 1999, followed by an increase of 24% in 2000. So while you're saying that real estate perhaps wasn't the opportunity there, investing in dollars was really where the money went. That was still more of an incentive than capitalizing on this price drop and subsequent growth in terms of pricing.
Yeah, but today, putting money in dollars, your chances of losing against the dollar is very high. Mm-hmm. Because I think in the next 10 years, there will be so much investment capital entering the Philippines, demand for Philippine peso will increase, and therefore the currency will appreciate, I think. But besides the real estate market, one thing that I do want to stress to many in the audience today is that the stock market is providing serious opportunity. And I think one of the best buys out there is Robinson's Land Corp. Because the stock is still heavily discounted, and it's recently softened in value, which is a very good buy in my mind. You know, I am holding quite a bit of RLC stock, and I continue to buy. And I think after this, while you buy the stock, you also pick up some of the real estate, some of the hard brick and mortar assets.
So I guess we've had a look back at the two previous crises. You've highlighted a few key differences now in terms of the strength and resilience of the Philippine economy, in terms of BPO jobs and the industry as a whole, the improvement in the peso against the dollar being much more robust. I guess, I mean, there must be some learnings from the previous crises that allowed the industry itself to implement new legislation to protect itself against future crises. Could you tell me a little bit about that?
Yeah, I think the hard lessons here are, and maybe the big behavioral changes that we need to make today, right, is going back to basics. Number one, save money. Save money. Number two, keep your debt levels low. Okay. Now, how do you borrow money safely? You borrow money safely by investing in real estate that will produce cash for you. Now, what do I mean by that? It's a lot better to buy a condominium unit that you can rent out, whether it's an office condominium unit or a residential condominium unit. Buy it, rent it out, and then with the proceeds of the rent, you can borrow money and buy a second unit, because the first unit and the second unit will work hand in hand to pay for the amortizations. That's what I mean by borrowing money safely, because you've got money that you've put into something that would generate passive income for you. What many people used to do is that as soon as they get money, they park it in land that will not generate a single peso for you. It will continue to be a liability until you're able to sell it. And you end up holding it for 10 to 20 years. And while over the next 10 to 20 years, you might have made a lot of money, it also costs you a lot to maintain it. It costs you a lot of opportunity cost to having your money stuck in land. And then what many people do is borrow against that land, right? It's not generating any income. It's a continuous liability, cash drain, because you pay for staffing, insurance, tax, etc. And then you borrow against it, and what you use to pay for the amortizations is your core income base. And if a crisis happens, your core income base is threatened, like today, and then it compromises your ability to pay the debt. That's a very dangerous situation. What I like is people invest their money in something that is cash yielding, and that cash yield will allow them to pay their amortizations every month. So that your core income, if something compromises your core income, you still have another source of income, which is your passive rental income to fund your debt and your lifestyle. And so
let's look at that in a bit more detail. I think the previous 10 years have been bullish. Capital appreciation has been significant for real estate. Rental yields, particularly in the CBDs of Manila, Metro Manila, have been extremely profitable for a lot of people. Has the pandemic had an immediate impact on both of those points? And is a secondary income like a rental yield still viable now? I mean, is it sustainable?
So yes, definitely. So what has been proven is that the office sector and the residential sector, expat housing, like the products of Robinsons in Bonifacio or in Magnolia, would be very resilient. Assets, because many of my clients have not given up their office space. As much as they are 90% working from home, they continue to pay their rent. Mm-hmm. Number two, the expat who runs these companies are living in condominiums or houses. They can't go to their landlord and say, sorry, my company's not going to afford to pay my rent. The landlord should say, if you don't pay your rent, then I ask you to go. And the guy has nowhere to go. So Mark, you better keep paying rent. So, and so the expat housing market has become very resilient. The office sector has been very resilient. In fact, it's the only asset class that is generating any cash in the world today. And if you look at the second quarter reports of Robinson's Land, of Ayala Land, of the big developers, you will see that their office portfolio is the only one that is growing in cash and in revenue. So, and then,
so there's no issues then in terms of renting, empty units, unit owners struggling to fill their units right now.
Yeah, I think it's fair to say that if you rent, if you buy a unit, you won't immediately have a ready tenant. You'll have to allot, at the worst case, 15 months of vacancy in the first year. But the moment you get your first tenant, just nurture and take care of the tenant, and they will stay with you, because the tenants don't like hopping around. They don't. The only reason why they leave the building is because they don't like the landlord. And so, as you learn to invest your money in real estate, the one discipline you have to learn is how to become an active landlord, where you don't wait 3 days, you don't let 3 days pass before you respond to a leak or something to be replaced. You've got to be an active landlord. And because if you become an active landlord, the tenant themselves will learn how to respect the asset, take care of it, stay with you for a long time, and that secures your income for the next 5-10 years.
Great advice. Thank you. I think talking of quarterly reports, I had a look at your April quarter one media briefing. In it, you listed a number of highlights, I think, that would drive the resurgence of demand for Philippine office and residential sectors. That included resilient demand from the IT BPM sector. We've already covered that, and certainly that is one of the strengths, I think, of the Philippine economy. Now, the second one we haven't covered in so much detail yet was a comeback of the POGO sector, and thirdly, a diversification of multinational corporations out of China. Now, have we already seen a resurgence of demand since April? And if so, are these the factors that are driving it, as per your media briefing?
Yeah, so we have seen a surge in the BPO sector. 50% of all space taken up since COVID crisis started has been driven by BPO. Okay, the POGO sector is still very quiet up to today, especially after last week when they just passed the Bayanihan Act 2, which impaired them with more taxes.
Right.
And I think unless we solve that problem of what the POGO sector views as overtaxing, when the government and the POGO sector have a compromise, then you're going to see this thing, this POGO recover in very, very quick way, very, very quickly, because they love the Philippines.
Yeah.
You know.
Yeah.
So the BPO sector will continue to grow. In fact, I think whatever the growth rate is here this year will be the start of an even bigger 10-year run for Philippine BPO, because as we saw in 2008, in 2007, the entire office market in the Philippines was in 2007 was only 200,000 square meters.
Mm-hmm.
Excuse me. So 2007, the total demand for that year was 210,000 square meters. In 2008, it jumped to 380,000 square meters. In 2009, it jumped to 400,000 square meters. So these 2 years, 2008 and 2009, the total demand in these 2 years was close to 800,000 square meters, which is 4 times what the demand was in 2007 at the height of the global financial crisis. As the entire world melted, the BPO sector grew and hired so many people, and that's why we have to keep nurturing that industry. And I think it will. And I think one of the nice things that one of the biggest differentiators that Robinson's Land is doing is this whole mixed use concept where you have residential towers, hotels, malls, and office buildings all within one compound. So you don't have to leave your township, and that's what Robinson's is doing all over the Philippines. We just recently helped them, for example, with their mall project in Ilocos Norte. Okay, in Ilocos Norte, they've got 3 subdivisions, one massively successful mall, the only one in northern Luzon, in North Luzon. Okay, and we brought a call center there, right? And they've got I think they're coming up with some more residential projects. So even as remote a place as Ilocos Norte is still touched by the BPO sector, still touched by a company like Robinson's, where they provide a self-contained environment. And I think between investing in standalone facilities, like one residential building in the middle of nowhere, we would encourage the audience to buy and invest in townships, just like they have in Ilocos Norte, just like what they have in Magnolia, Robinson's Magnolia in Kansas City.
Sure. Okay. So aside then, I guess, from the kind of key pillars there, the IT, BPM potential for POGOs, are there any other kind of new factors that you see driving a resurgence in demand?
Yes.
Perhaps from demographic shifts in behavior. I hosted a webinar the other day, and a few developers noted an uptick in millennials investing, perhaps more cash available from saving on other areas of their life. Obviously, infrastructure is a big part of real estate, the real estate development in the Philippines.
That's an oxymoron. Millennials investing is an oxymoron. Millennials, by definition, don't have savings, don't give a damn. They only look 2 weeks ahead at the most. I'm being facetious, but yes, the one big driver, the next big kicker for the Philippine economy is infrastructure. And what many people don't realize is that there will be 11 infrastructure projects that will be completed within Metro Manila in the next 12 months or less. Okay, and if you add the Clark Airport, that would be 12 projects in the next 12 months, right? These are 3 bridges, 3 major highways, four major highways, and 3 rail projects, and 1 massive airport called Clark International Airport. Okay, the total, if you just connect these roads and bridges and rails, that's a total of 145 kilometers of road that we never have built. This is the first time we've ever had an injection of this much road in one 12-month period in the entire history of the Philippines, outside 1977 when Marcos completed the Maharlika Highway. You know, and this infrastructure of 145 kilometers, 12 major infrastructure projects reside in the geography between Clark, Cavite, Laguna, and Antipolo. Okay, and Antipolo and Cainta. But these 11, 12 projects, I think, is going to cut traffic in half. That is the single biggest benefit for the Filipino. It will cut traffic by half. Okay, it will touch 30 million people. This geography between Clark, Cavite, Laguna, Cainta, Antipolo, that geography is very small. If you look at the whole map of the Philippines, it's very, very small. It's not even I don't think it's even 1% of the landmass of the Philippines, and yet that comprises 30 million people, one of the densest population cities in the world, geographies in the world. But it also is responsible for 60% of the GDP of the country. Now, if you gave 30 million people another 3 hours of free time, because before all these infrastructure projects, the average worker is spending 6 hours a day commuting from home to work and back. 6 hours a day. That's going to be cut to 3 hours a day. You're giving people another 3 hours of time for their life. Yeah. For what? For gym, to spend with their loved ones, to nurture their kids, to study.
Start a second business.
It'll be so exciting. Yeah, instead of having 4 meetings a day, you'll have 10 meetings a day.
Yeah.
I mean, just imagine the power of that. So that would be the single biggest driver. And you know what? As soon as because right now, for the last 6 months and counting, we have been stuck in our apartments or in our homes. We have not been allowed out. And even if we are, it's like very restrained. And because of that, we don't know what's going on with the rest of the city. But what's happening in the rest of the city we don't see are all these massive construction projects. And by the time we get out and this COVID crisis is over, it will be truly a new day for Philippines. Because all of a sudden, we're going to drive to places on new roads that we never thought was possible. We never saw it be under construction the last 12 months because we've been locked up. And the euphoria of that is going to be fantastic. You know, you just try to imagine what that is going to be like. It's going to be euphoric.
Is that, is that development, obviously that's going to cater to the 30 million people within the geographic region, but is it also going to draw more people into the region?
Oh, definitely. But, see, before, let's take, for example, Sharon, a project Robinson's Land in Cainta, which actually is at the foothills of Antipolo. It would take you 2 hours to get there and 2 hours to leave, to cover 15 kilometers. Okay, that's going to be cut by half. It will make living in the outskirts more viable. So you don't have to be in very, very appalling living conditions. Just look at the middle class. The middle class is truly in very, very bad living conditions in Manila. But with more land being made available, with infrastructure to make it easier to get to, it will be viable for the middle class to move out further away from their homes without sacrificing the travel time, and improving the quality of life. Another example is that Robinson's got a development up in Antipolo. Well, less than 2 kilometers from that property is the new train. There's a train that runs from CM Recto, Aurora Boulevard, all the way to Marcos Highway, and it stops at SM SM Marcos Highway. But that train is now being extended by another 3.8 kilometers all the way to Sumulong Highway. And that stop will just make it 2 hours, 2 kilometers to this new Robinson's project. That's just one of many, many examples of why it will be easier and more viable to live further out.
And invest in the kind of southern Luzon region. I think coming back to the pandemic, I think we've all, I think, feel a little bit more relaxed recently. One of the common stances from investors has been one of wait and see, and I think that's true of the market as well. But that's, I think, understandable, especially in the early days of ECQ. But now we're starting to see easing unemployment. Overseas remittances are starting to increase month on month. The same can be said for foreign direct investments. How much confidence do you have that the worst of COVID-19 is behind us for a positive quarter ahead?
Well, I'll answer it this way, okay? I think the cases will continue to rise, okay? Because of two things. One is because we can't afford to lock down, so we are less restrained today. And number two, let's forget the fact that it is that the Filipino can actually isolate themselves. You know, the Filipinos are the most sociable people on the planet. They'll go crazy being isolated from other people. We cannot stop ourselves from socializing with other people, right? And those two factors would just drive the cases further up. However, as the cases go up, right? Bear in mind that there are 200 companies all over the world looking for this vaccine, and another 300 companies all over the world looking for this cure, right? And the five frontliners of this vaccine effort will have their vaccines out within this year, within the next 3 months, worst case in January. And while they might have limited dosage, meaning their plan is to have 100 million doses for the US, 100 million doses for the UK, for the frontliner. AstraZeneca is supposed to have 100 million doses for US, 100 million UK by January or December this year, January of next year. But AstraZeneca's ambition is to have 3 billion doses on its own sometime by the end of next year.
Yeah.
So, and that's just the first of 5. So in my view, based on what I've seen, in the next 4 to 6 months, we should have a meaningful volume of vaccines out in the world. Okay, 4 to 6 months, and that alone will have a significant positive impact on investor sentiment. And so we're going to see the stock market lift again. We're going to see banks willing to lend again, and therefore interest rates are going to start collapsing. And so what I tell people is you depends on your kind of character. If you're a risk taker, then now the next 4 months to 6 months is a time when you should be investing meaningfully. Everything that you've been trying to save for a rainy day, this is the time to deploy it in the next 4 to 6 months. Because after that, things will be going up. And then the developers, for example, companies like Robinson's Land are now offering very low down payment, very stretched payment terms. By the time the recovery happens and the banks are lending again, they're not going to need to do this anymore.
Sure.
So you're going to miss this opportunity of more or less being so close to the bottom. Now, I could be wrong, right? What I say now is not the guarantee of what's going to happen in the future, but this is based on what I have been reading and watching and talking to so many people from around the world. And second, that's also what I'm doing. So I have never been as committed to investing in Philippine real estate and stocks as I have today.
Right. That's actually my next question is what opportunities are in the market right now that won't be there? And I actually put a timeline of 4 to 12 months, from 6 to 12 months now, but you've said 4 months. I
4
mean,
to 6. 4 to 6.
4 to 6. So I mean, interest rates are already pretty low. There are some discounts. Well, I think that's what's interesting about this pandemic compared to the previous, as well, is that pricing hasn't necessarily risen. It also hasn't really fallen. So the incentive isn't necessarily in deep discounts. It's more in the more flexibility in terms of entering into that commitment. So I guess that's the kind of the opportunities that are there now are in these flexible amortizations and the low interest rates. Is there anything else you can think of that might be a good incentive of investing right now?
I think the opportunity of refinancing, because right now banks are not lending, and so they're keeping rates at 5% or 6% when they should be at 3%. To the average person, they should be lending money at 3-4%. Instead, they're lending at 6%. But when we're out of this, I imagine the banks to be somewhere closer to what they will reduce the spreads from T-bill rates. And so that gives many buyers opportunity to refinance their units or their property. And by refinancing, it allows them to save meaningfully from the interest payments, and that's another source of investable income. So I would prepare to refinance my loans. Yeah.
Okay. Yeah, interesting stuff. I think your level of confidence is definitely a sentiment that we're seeing across the market. Certainly, if you've saved for a rainy day, then that rainy day is perhaps passing. So let's say I have saved my money, and now is the time to invest. My confidence level is looking good. What is it that I should be looking for in an investment? So in a project or development, or in a developer that would give me the kind of confidence in that long-term investment?
The typical mantra of real estate is location, location, location. But I think really it's all about location, liquidity, and landlord. Yeah. Location, because you have to have access to infrastructure, you have to be in a safe community, you have to be in a well-planned community, right? Number 2 is your liquidity. When you need to sell, you want to be able to sell within a reasonable amount of time. So that's what liquidity means. It means that when you need to sell, there will be buyers waiting in line. So it's no secret that my mother lives in Robinson's Magnolia, and we're in the process of upgrading her unit. So we're going to move her to a much larger unit in Robinson's Magnolia. And the first 3 days of us announcing in the internet that we were selling the unit, people were immediately wanting to pay the price that we asked for. Sight unseen, say, okay, you're selling, we're gonna buy. Done. That's liquidity. Within a few days, we're able to sell. Now, is it always gonna be like that? No, but the lesson there is you have to invest in assets where the public wants to keep investing in. Okay, and that's defined by infrastructure, by community,
quality of the building,
and the quality of the building, the workmanship of the building, the tightness in which they maintain the legal aspects of the building. Because so many developers fail to deliver the titles to their buyers on time because they're doing all sorts of funny business in the back room. Which brings me to the third L. So we have location, we have liquidity, and then we have landlord. Because you have to go and know who you're buying your product from. The last thing you want to do is to buy a unit and then the people running the building are so incompetent, they can't make decisions on their own. And then the developer ends up saying to you, in effect, hey, you bought this unit from me, you're on your own. I don't care anymore. I don't have a hold on you. You don't have a hold on me. Bye. So what you want is an active landlord, an active developer that will help you through whatever quirks they have, and who will be fair. Who will be fair. I don't think you should ask for generosity, but I think you should ask for fairness. And there are very few landlords out there that are fair.
Location, liquidity, landlord, the new 3Ls for real estate. Thank you, David. I just want to finish by asking, this doesn't, I guess, necessarily need to be focused towards real estate, prefer it if it was, but what are you most looking forward to for the fourth quarter of 2020? It's obviously, we're in the Burr months now. It's usually a kind of downtime, I guess, for the industry. But what's your kind of outlook for the next 3 months?
What am I looking forward to, or what my outlook is? Those are two different questions.
Maybe both.
So there are two things that I really, really, really look forward to. The first one is, if there's one piece of good news that 2020 will deliver to humanity, it is the possibility of replacing Donald Trump this year.
Yeah, there's a few people that would agree with you there, I'm sure.
Because we need the US to do well. Not just well in the sense of stock market, not just in the sense of I don't know, the one metric of job growth. I think the US is a whole lot more than just those two things. And I'm not alone in saying that they want the US to do well, more than just these two aspects, these two metrics. Mm-hmm. The second thing is that the vaccines, the credible, scalable vaccines, hopefully the first few will be out by this year. And that will have a massive transformation on morale of people. Let's bear in mind that the 5 front runners of the vaccine have a target to produce 6 billion doses of the vaccine. Okay, there's only 7 billion people in the world, right? And there's only a few millions infected so far, right? So we have more than enough, and you shouldn't worry about the pricing, because a lot of people are saying, "Oh no, but the third world will be able to avoid these vaccines." It's not true. They're going to make it so affordable that it will be accessible.
Fantastic. Okay. Well, that brings us to the end of today's webinar episode. David, thank you so much for joining us. Thank you for your insights, your optimistic look at the industry and the outlook moving forward. I think it's safe to say that the Philippines is in a far better position to weather this pandemic as it has been in previous global crises. So we'll look forward to perhaps speaking with you again sometime in the future. Thank you to everyone for watching, for tuning in, and we hope to see you all again next time. Thank you so much, David.
You're welcome.
Robinsons Land Corporation, one of the largest real estate developers in the Philippines and a subsidiary of the JG Summit Holdings Incorporated. Through the years, RLC has established a name in the real estate industry as it remains on top of the game in laying out the most well-designed and exceptional lifestyle spaces to the market. Its wide array of prime residential developments across the country has inspired many individuals to explore opportunities that provide a rewarding lifestyle experience. Being one of BCI Asia's top 10 property developers in the Philippines, RLC Developments have been highly regarded by prestigious international and local property award-giving bodies. With close to 3 decades of experience in property development, RLC has made a legacy that is strongly associated with good value and high-quality developments that our employees, customers, business partners, and shareholders can be proud of. It has evolved into a property developer that continues to draw interesting blueprints of fresh concepts that go beyond the ordinary. Concepts that have the power to make lives anew. Concepts that create a sense of fulfillment to families, professionals, and young investors. In the years to come, RLC is envisioned to reach greater heights as it continues to expand its widespread portfolio of innovative developments that have made a big impact in the lives of Filipino families. We are RLC. Your dreams, our foundation.